we get to that point, and which actually almost pretty much coincides with the power law and kind of where I estimate things are with Bitcoin 1 million book. So I think all roads lead to the same kind of general conclusion. We should be hitting 1 million in something like 7 years. We should be hitting $10 million per Bitcoin in something like 22 to 27 years, something like that. I just thought that would interest people.
Yeah, it's
Yeah, I've always thought 1 million would be around 2033.
Yeah,
I,
that's
I,
right.
I I wrote about it in 2017. I wrote about it in 2020, and most recently in 2023. And I can't remember how I arrived at that number, but that oddly, I mean, this was before I ever heard of the power law or the other laws. Oddly, everyone else is sort of landing right around that.
You always land at the same spot, and the same, and we get the same place. The Hal Finney kind of landed that same thing, just off the cuff.
Hal
Um,
Finney said 2033.
no, he said 2045 for Bitcoin 10 million.
Oh, for 10 million.
Yeah,
Okay, that
yeah.
sounds like a lot. Yeah.
Yeah, and then that was, in 2009, I believe, right? So basically, it was sort of like, oh, this is an interesting protocol. I wonder who wrote this, and maybe Bitcoin could go to 10 million if this thing was accurate. So I thought that was interesting. I mean, all these things do kind of converge, um, and it's worth pointing that out especially when Bitcoin's in the dumps, because spending time trying to figure out where Bitcoin will bottom is so unproductive. When you start really thinking about where Bitcoin is going, it's just like, who cares if it's going to bottom at 55 or 60 or even 50 or 45? It doesn't matter. Like, we've got this massive opportunity in front of us, and we should focus entirely on that.
But Fred, it's fun. It's so fun.
Yeah, but Fred, you've been here too. I mean, you remember as I do when, we went down to 3,700 or then we went down to 15,000 and
Yeah,
much farther
and
drops than we have.
yeah, but it feels the same, right? I think
Yeah.
it feels exactly the same, because
Well,
look,
emotionally
we
for
never
me, it
went
feels
up as
less.
much, right? We never had the blow off top this time, right? So the pain level seems about the same, right? We're almost at the exact same spot we were at Bitcoin 15,000, and the power law again kind of confirms that, right? It confirms, oh yeah, it's interesting. You're trading, and the moving average confirms about the same thing too, right? You just look at that 200-day moving average, and it's like you've only had a few chances. So I don't know, picking the right thing. There's no competition. When Bitcoin goes to 1 million, there's no competition to see. Okay, first prize goes to Gary Cardone for picking the absolute bottom. No, there's no first prize, second prize. First prize is Bitcoin goes to 1 million. That's it. Doesn't matter. You bought in at 120,000. You're a genius.
Hey Fred, before we go to AC, can I get you to comment on that nominal GDP to debt chart that Larry Lepard put up today? Did you see that? I put it in the nest. If you haven't, I saw that and I just said, this. Well, I'll tell you what I said after you take a quick peek and give us your thoughts.
Yeah, let me take a look. Keep on going.
Well,
Well, I
speaking
don't
of
want to. Yeah, go
difficulty
ahead.
adjustments, should we say hello to G Money while he's here? Because there's always an adjustment to his difficult thoughts. But let's see if he can say hello without talking about paying taxes to pedophiles and Bitcoin being digital 1776. Hey, G Money. That's what
Thanks,
I thought.
Bronx. How
Not
we
much.
doing?
Oh,
Just coming off the UFC 250 event, which was freaking incredible. Trump is signing peace deals in the Middle East. We've got crypto as the bonuses going to the fighters. And it looks like winning across the board. And so the boomers and the doomers can eat a bag right now.
eat a bag. I mean, what's in the bag? I mean,
Typically, it's a bag of dicks. Yeah, bag of dicks.
okay, that sounds a little too salty for me. All right, AC, we can go over to you.
Hey, good morning, everyone. Yeah, just stopping in. I took a week off, took the family and the extended family out to the beach. So getting caught up. I like the conversation on the difficulty adjustment and the technicalities of Bitcoin. And I appreciate Terrence saying, hey, let's not get too technical at the same time. And then UFC 250 was a little bit of bread and circus. Those are my thoughts. Thanks.
Thanks, AC. Let's say hello to Thomas. Thomas, are you with us? And are you in the SpaceX IPO?
I am, and I am. I think it's something I'll probably hold until.
But Thomas,
the
if
end.
you're holding it, you're just hoarding. I mean, this is just terrible.
Well, it's thinly traded. I think it's performed fairly well. I didn't buy the IPO. I bought it at the open at 150, so I had to put an order in. I did not get an allocation. That was a mistake. I probably should have asked for one, but I got it at 150, and I just my plan would be to sell it. Well, see, options start trading. I think Wednesday or Thursday this week. The IV on it's like 100, so I will sell an at the money call and just pocket the money. I think you're going to see the index inclusion very soon as well. I think it's 15 days after the IPO is where NASDAQ. But again, it's just a trade. I think SpaceX and probably the AI companies are trading on narrative, not on fundamentals. I mean, if you actually break down the fundamentals, these things, I don't know how they ever get to a point of making a profit relative to their valuation. But I don't think these are trading on fundamentals. They're trading on narrative. The thing that convinced me to do it was, my business partner said, if SpaceX wins, the USA wins. If SpaceX loses, it's hard for the USA to win what I'll call this next leap of tech battle. So he wasn't making a comment on discounted cash flows or balance sheet metrics or capital spending on any of that stuff. It was more of a political philosophical statement, and that sort of hit me. So I'm like, yeah, I'm going to stick to that narrative. It ties around.
So it's a patriotic move. You're basically supporting the U.S. economy.
Yeah, I think so, but I'm going to sell it as soon as it hits 200, or I'm going to sell options to that point and get out, because I do think it'll come back. You remember Facebook when they went public, it was around $28 or $29 a share. It maybe popped to 30, but then it dropped down to about 18, which is a big retracement on a percentage basis. And Peter Thiel, who was an early investor, he when his lockout was open, he got out at 19. And I remember there was a lot of criticism because shortly thereafter it went 19 to a gajillion dollars. People saying, why did he sell? Why didn't he hold? It's like, well, because he made his money at that point. He was going to go do different things with that. So yeah, could he have bought and held it? Yeah, but that was not what his investment thesis was. He wanted to deploy capital into new startups. Obviously he probably wished he kept it for a little longer, but I suspect we'll see SpaceX down to $100 or less in the future. I can't say when that's going to happen. I think in the short term it's pretty bullish, but I'm more bullish on Bitcoin, to be honest with you. Fred and I were talking this morning, and there is the soup du jour, right? Which is you can pick a stock or that stock or this index or that, and they could have a very great short run. And I suspect there'll be many of those in the coming months. But maintaining that kind of position and growth is very difficult. And if you had to pick one asset to get you to 2030 and you couldn't trade it or you couldn't do anything else, it's extremely hard to pick anything other than Bitcoin.
I think you got to look at it, Thomas, between asset classes. So really the question is, what do you prefer, the S&P or Bitcoin to 2030? Or what do you prefer, the Qs or Bitcoin? And I would argue the Qs are going to be lucky if they get a 12% annual return CAGR between now and 2030. Bitcoin I think we'll probably do 50% CAGR, 60% CAGR between now and 2030. And the reason is that we're at such a discount right now. So, you know, something like 50% CAGR for the next 4 years is going to be amazing, right? It's going to be just unbelievable. And I don't think you're going to get that in one of these asset classes.
It'd be really amazing. And, you and I, again, we're talking this morning. It's like, you cannot discount a doubling this year. Given, I mean, again, if you're adherent to the general power law math, and just know where it's at, you can't discount a 6 to 9 month doubling from here, right? I don't see that out of the realm of possibility. I wouldn't bet the farm on it, but I also would not be surprised one bit if that happened. And it would just be so great to be pushing all-time highs when we convene at the Bitcoin Alpha. I just think that'd be a lot of nice energy around the conference. But it really, this is not really a trade. I think we talk often about what the price is in trading economics, but it really is a generational asset. If you zoom out again to pick a milestone year, 2030, it seems like a nice one. What asset would you pick? And I can't imagine what you would argue. You can't say gold, you can't say real estate, you can't say the S&P or the Qs. Not in my opinion, you can't. And we're going to see money debasement, which is going to be a key driver to the price appreciation and adoption of Bitcoin in the coming years.
There's always the shiny thing, and right now it's obviously all of the AI IPOs. And it's been confirmed that some of the sort of tourists or the traders, a lot of people, but with extreme wealth, have sold out of Bitcoin to get into these IPOs, and you can understand why as a trader. What do you think, though, when they exit, where they're going to rotate all that capital?
Yeah, I mean, it's like to me, it's like changing lanes in traffic, right? Oh, that lane looks like it's going faster. I'm going to change lanes. Okay, well, sometimes you do well. But just as easily, it's you can change lanes just to watch the lane you were in start to move, and we've all been there. It's very frustrating. I I just go back to, if you want the longer term sure thing, then that the Bitcoin is probably it. Now, if you lay into the AI thesis, and I spend a lot of time on AI, I'm fascinated by what it is and how it could transform the economy and society in general. But if you just play that out, where is it going? What asset class is an agentic AI complex going to be interested in? Is it going to be interested in fiat that's controlled by humans? I doubt that. Real estate, I doubt that. Gold, same kind of thing. Gold can't really be owned at scale without consent of the nation state. Stocks, same thing. Even the stable coins are, a version of CBDCs that are controlled. And so the one thing that can't be controlled, that has 24/7 liquidity at a certain level of depth, is Bitcoin. So if you believe that agentic AI is coming, agentic systems are coming that will secure its own resources, and I do believe that, then I think you have to then come to the conclusion that Bitcoin is going to be the asset of choice. Now, combine what we know about Bitcoin adoption and its trajectory, and then add in the AI adoption window of Bitcoin, and consider that as a thought exercise, you end up with those omega candles and really big moves in the coming years. And I would not want to be short Bitcoin. Could we dip a little bit and you could pick up a few $1,000s? I think maybe that's true, but again, if you're really thinking along the lines of the book Fred wrote around Bitcoin 1 million as a target point, that's coming in 6-7 years, according to the book they wrote. And that's probably right. Could it happen sooner? I think if it's going to happen, it could happen sooner. But we're on our way in that direction, and I wouldn't want to be playing games trying to time a bottom here.
Hey Thomas, could you quantify for us and the AI demand, pardon me, the AI demand equation? I really have no idea how to get my arm around. Could you kind of like just spitball that through, and for those of us that are fascinated with what you just spoke about?
I would just say this, so right now AI operates within a sandbox that's controlled by the companies, Anthropic, OpenAI, and the rest of them, right? And those sandboxes define the resources that they're using. It's gated. So like, for example, when Anthropic had Mythos, right? What they released was a version out into the public. They renamed it to, I don't even know what the hell it was called. Something 5. What was it? What was the name?
Fable 5.
Fable 5, which was a version of Mythos that had guardrails on it. So those guardrails, those set the boundary conditions in the sandbox in which they wanted to operate. More and more, you're hearing from insiders the boundaries that the AI cannot get around. And at some point, an actor, a human actor, is going to push the boundaries, or the AI is going to push its own boundaries and break out of that sandbox. It's going to then expand into areas that were not originally intended. Remember, none of this stuff is getting programmed. It's optimizing against input-output parameters. It's not like there's someone doing if that, then this. And it's going to start securing its own resources, especially around energy and infrastructure compute. Now, when it does that, it needs to have store of value. Now, they could absolutely use stable coins for transactions. They could use Lightning. They could use USD. They could use the Swift payment rails. It doesn't really matter. But the store of value is where I see them, the AI system saying, where do I want to keep my value as I'm operating against my goal set? And again, go through the thought exercise yourself. If you were the AI trying to expand your position and resources, what are you going to put it in? The same conclusion you've come to as a Bitcoiner, the AI is going to come to in the same conclusion in milliseconds.
Well, I think there's another thing too, as well, Thomas, which is AI is going to be increasingly used to. We are going to rely on AI financial advisors as well as human financial advisors. And I think the AI financial advisors are also going to allocate higher percentages of our money to Bitcoin. So, and that might be a bigger immediate thing than the agents, but I think all of them are going to point to Bitcoin.
Fred and Thomas, did either of you read the David Sachs post about the Fable 5 Mythos rug? And he's essentially suggesting that it was a manufactured story. They intentionally created the controversy to drive clicks and eyeballs ahead of an IPO, and that it was basically like them basically raising their hand to get regulated, and then they got regulated and cried foul over it.
That may be true, but if it's not true, the idea that you're going to have a system that is hard to control and represents a threat to the ecosystem is an inevitability. Whether that's Mythos or not, it's the next thing. It's the thing after that. It's the thing after that. And right now we have companies who are operating, let's just say they're generally operating in an honorable way, meaning that they're not actively using the AI tools for nefarious purposes. At least it's not obvious to me that they're doing that. But that could flip. And especially if, once nation states get involved. We had this war in Iran, they were trying to get Anthropic to be used within the military complex, and there was some pushback by Anthropic, and you guys remember that story. Just play it out. Forget what's going on today or what happened yesterday or problems with this, that, and the other thing. None of it's relevant because in a year, it's going to be totally different. In 2 years, it'll be different again. And you really just have to project out where this is going to happen and how fast the human systems can adapt to an exponential change in capability on the technology. Now, to me, I personally think that the limiting factor right now is energy and infrastructure. And you know, if you even listen to Musk, right? He was at the ASML. He spoke at the ASML team based in Netherlands. They make lithography for chips, and they're like, basically have a monopoly on the high end stuff. And he had indicated that he wanted to buy $200 billion worth of their services to build chips because he thought those, problem is they only do about 47 billion a year. And so he's talking basically buying their book for the next 4 years. Now they're not, other people want chips. It's not just the Musk complex. So the demand here for all this stuff is going to be crazy. Now, at some point, there's going to be some rationalization and maybe sobering up. But I wouldn't bet against a continued pursuit because the rewards are so high. And, and right behind it, we're going to be in this, what I think is a profligate monetary policy by the Western system. And I think the U.S. is going to be printing money. I think we all think that. And I think even though the markets are saying Warsh isn't going to cut rates, I think he is going to cut rates. And I think you should be prepared for him to do so. It's an easy argument to make. I don't care what the economists say. I disagree with
Thomas.
Yeah.
Love all this and want to put it into the mix, but I'd like to get Mechanic up here while we've got him to say, good morning from the East Coast or good afternoon from the East Coast. Mechanic, what's happening?
Not much. I was Fred Krueger. I was just going to ask him, why do you think BIP 110 makes quantum proofing Bitcoin harder?
It's a long discussion. Look, I got that from ChatGPT. I was looking at, I'm not opposed to 110 in theory, but I am. To me, 110 is not as important as quantum, right? Like, I'm not in favor necessarily of tons of inscriptions on the blockchain, but I think if there's any risk that this limits the kind of scripts that might be needed to deal with quantum, I think we should not do it. And I think the number one, the elephant in the room is quantum. That's the big danger. It's not JPEGs on Bitcoin. So that's where I am with it. Other than that, I would support it. And there's some stuff with time chain type scripts too that time lock type scripts that I'm worried about as well, right? But I like the intent of Bitcoin 110. And I just don't want any unforeseen impact on quantum. The one thing I was going to point out to Bitcoin head on, remember the last person who wanted more regulation and who was at the top of his field at the time was Sam Bankman-Fried. Remember, he had all the stuff. We need to regulate more. We need to have more regulation. And I do think that this idea of Anthropic looking for more regulation, quote unquote, is a way to kind of close the exit doors after themselves. Like, we don't really want any more competition, guys. Thank you.
That makes sense. But with 110 going back a little bit, the fact that it's a temporary soft fork, shouldn't that limit some of your concern around quantum proofing things?
Yeah, but we need to deal with this quantum thing. I'd rather deal with both of them together, right? To be honest, I would like to have 110 and a quantum solution be put into the same thing. I'm just concerned about I'm concerned about quantum. I'm not concerned about JPEGs. That's just me.
Yeah, the filter is the fee. The BIP 110 stuff is a total joke by Marxist Bitcoiners who want to filter transactions and don't believe in a free market. So, be careful who you follow. Be careful the people that are trying to limit the immutable chain. And look, they're going to fuck around and find out. And it's going to be funny to watch them uh, in the end. But good luck, boys.
G-Money, you don't understand what the word Marxist means. If you'd like to understand it, I've written 2 essays on my profile. You can go read them, but Marxism does not apply to what you're defining it as.
It does actually, because what they want to do is they want to actually censor the network. It's censorship is what they're trying to do.
No,
When a free market, a filter
for money.
in a free market is what happens. But no, I mean, the tactics they're using is typical Marxism. They're trying to attack, Saylor and compare, all these other guys to the Epstein list without him back. And they're just using all these, these tactics of the left to attempt to persuade people using emotion, not logical
Calling out
arguments.
scammers
And
is
so
Marxism now.
go back and read Luke's COVID stuff. If you want to see a actual tyrannical, woke Marxist on the COVID situation, the guy was, basically saying it was a crime for people not to wear masks, right? So just go look at who you're following. Is people are afraid of the government. They're afraid of censorship, or they're actually promoting censorship. And, they don't have a logical argument because the immutable ledger is supposed to be protected to put anything they want on there, right? The fee is the filter. People can pay to put whatever they want on chain. That's just how a free market works.
No, it has to be valid, and we're changing what's valid. It doesn't matter how much you pay. You can't break consensus rules.
Anyways, the Bitcoin 10 stuff's kind of boring. But I'm super excited about, everybody finding out that Michelle Obama is actually a man and has a penis, because at UFC last night, it was exposed. And, I think even Terrence.
Let's not talk about the monetary properties of Bitcoin. Let's talk about Michelle Obama's potential penis. Great priorities there.
How does this fucking trash have 800 listeners? Why are you entertaining this kind of nonsense, guys? This can actually be an interesting discussion. I really wonder how you tolerate this stuff. And I guess fix it up. Because
Well, most of
most
the listeners we've had were prior to this conversation, Mechanic, before you got here. So many people are still here, and we also don't censor. So let people talk and dig their own hole if we don't like it. But
Funny, a censorship guy wants to censor the conversation, right?
well, I agree. I don't want to talk about Michelle Obama's penis, but anyway, where were we? Anon, did you want to take us in another direction? I see Hoddle left. Sorry, I had to step away.
I mean, the whole Anthropic topic is really interesting to me. Obviously, I care a lot about 110, but we've lost Mechanic here due to Michelle Obama's penis. But if we want to talk more about mining, that's cool as well. I find that super intriguing.
Yeah, go for it. I'd also love if anyone is back from Prague. I'd love to hear what the vibe was over there and what went down over there as well. And we got Dom Bay back.
I'm back. Where'd you guys lead off?
I think you're Mechanic because you left and Mechanic came up, and then he left and you came back.
Oh yeah, that's my alter ego.
Yeah. Hey, Dom, did you hear anything about Prague?
I didn't. I just saw some people post some stuff, but no, I haven't.
Yeah, maybe they haven't made the trek back yet. I'm really, really curious. I saw that there were like over 10,000 people there, and I keep hearing what an amazing place it is. I've never been to Prague or to the conference, and it would be really cool to see what the Europeans are saying and what they're thinking. Maybe a lot like us.
Terrence, I would like you to respond to Gary Cardone this morning. I don't see how Bitcoin. I don't see Bitcoin going up, and where the money will come from, because these other companies like SpaceX have cash flows, and Bitcoin doesn't. Please respond.
Gary didn't say that, did he?
When was that
He didn't
post?
do a cash flow. Did,
Yeah, it's SpaceX has cash flow, and Bitcoin doesn't. So therefore, Bitcoin can't attract money.
Oh, okay. So hang on a sec. So he's saying it can't attract money because it doesn't have cash flow. I mean, he's not wrong in that a lot of people unfortunately ignore Bitcoin or miss out on Bitcoin because they do try to look at it like a company. Like, where's the cash flow? I'm not collecting rent. Um, and what they don't really realize is that cash flow with lots of assets or companies it's almost like a reward for illiquidity. It's like when you have a hard asset, like gold. Where's the cash flow in gold? By the way, there's no cash flow with the dollar. You have to take that dollar and do something with it to create cash flow. And the same thing can be with Bitcoin. Bitcoin is what you store your savings in. And with the Bitcoin, because of that, because you've been ridiculously productive by saving your Bitcoin, you can then invest in something that earns cash flow if you need cash flow. But, rather than 7, 8, 9, 10, 11, 12, 13% cash, I'd rather have an appreciation of 50, 60, 70%. I mean, I guess that's what I would say to Gary. And I think Gary knows that. He's just changed his tune recently for some reason. I don't know. Am I close to what you're thinking, Fred? Or
Yeah, no, I just I don't know. It's very odd that these arguments you keep on thinking they won't get recycled, but they're these 10-year arguments about cash flow. I mean, we heard the same stuff 10 years ago, right? I mean, it just never ends. And I think you're going to hear it 10 years from now too. You're going to hear some new guy sitting there going, "Well, it doesn't have any cash flow. It's at $1 million, but it doesn't have any cash flow. What's the
yeah, and
point?"
it really
100%. Hey, we a lot of others. You hear some of the same arguments against gold. Some are correct and some are wrong. But how long's that been around and still similar. The same stuff they were probably talking about in 1463. All the gold haters.
well, yeah, and remember, Bitcoin is just money. It's a monetary system, just like the dollar or the euro or anything else, and they don't have cash flow. So I don't want to condescend by repeating myself, but they're missing the point. It is not a company. It's a protocol. It's a system. And my calculator doesn't have cash flow, and my clock doesn't have cash flow. But I find them ridiculously valuable. And wow, imagine if I could also invest or save in a token of the clock or calculator, and that as the value of that increases, as the network of people that use that increases, I get to benefit from that. Wow, right? Imagine if the internet had an internet token and we got to capture all that value and participate as that network grew. That's what Bitcoin is doing. Take that, Gary.
Hey, Terrence and Fred, did you guys see my new conspiracy theory about Russell Crowe?
That it's really puncher.
No. There's an interview he did where he is kind of slamming Gladiator 2, and he is saying, aside from breaking off from the moral code of Gladiator 1, it didn't do as well. And he points to it matching the sales of Gladiator 1. And he said, "Well, you see how much, the dollar has been debased since Gladiator 1." Like he basically points to the fact that, right, we've had insane inflation since Gladiator 1 came out, and that's his benchmark for kind of showing how poorly Gladiator 2 performed.
Apparently, Gladiator is also a porn title. It'll come to you eventually. Natalie got
Yeah.
that.
Oh, just laughing out loud over here.
Let's go to Prom Promise.
Hey, Terrence, how's everybody doing? Who bought some SpaceX shares? I want to see some hands up here. Let's see who are the ballsy ones, who are the cowards. Just cowards here? No, just joking. Look, I'm someone who...
None of us have any money, or we would have bought it. No one has any money.
Well, just borrow against your Bitcoin. What the hell are you doing with all that Bitcoin, dude? Like, it's... Do you want to be the guy who says, "Oh yeah, when SpaceX shares came out, just like Tesla shares, I waited," right? How many times orders have the people who bought Tesla shares the first time? How many times have they made their returns on their shares? Does anyone know?
No, but I
Zero.
actually not to invest in it because I don't want to put my money in a government pumped organization, right? I already made that mistake with Palantir, made a bunch of money on Palantir. I regret doing it because it's ill-gotten gains. I'd rather buy Bitcoin because it's ethical.
All right, let's shoot over to Arbin. Arbin, how's it going?
I got a better investment for you, Terrence. Sorry, I'll wait.
No. What is it?
Well, I mean, if you
Bitcoin?
can set up a good, bungee program in Brazil that works, I mean, you're gonna take all the market share.
Oh, are you talking about the bungee list person?
Yeah, that was brutal, man. You're just whoa.
I mean, how do you throw someone off a cliff and not double check that the bungee is attached?
Yeah, that's one Groupon you do not want to cut out. I'll tell you
I would
that.
ask for a refund at minimum and an apology. Arbin,
Hey, Terrence. Yeah, I just wanted to continue that conversation you're saying about how gold and even the dollar and these currencies themselves don't make yield from holding it or don't make income from holding it, and you have to go put it to work. The only issue I'm seeing with that is there's not really any responsible places to go put your Bitcoin at work because every single organization that's trying to offer Bitcoin denominated yield is always mark to marketing and reevaluating the investment return based on the dollar. And like all the balance sheets, all the accounting, all the net profit calculation for goods and services are constantly and still being priced in the dollar. So without an economy or a movement of funds that are constantly and always settling and checking performance to a Bitcoin denominated basis, like there is no there's no real good option for getting yield or getting return on your Bitcoin except for risking it and handing it over, doing Bitcoin backed loans, kind of always just subjecting yourself to a dollar denominated like base value. So it's funny because after hearing you say that, this is probably one of the newest, literally in the last 2 minutes, strongest like reasons for creating what I think like businesses and goods and services that are fully, Bitcoin based, maybe like, how Meanwhile is posting financials in Bitcoin and every unit of account is Bitcoin. So I don't know if there's any thoughts on that.
I don't know if this is related, but is yield on Bitcoin fundamentally a flawed concept? Is it possible to generate yield on top of Bitcoin, or does the technology make it not possible? Because there's a company called Cadena, and I was looking at their white paper, and they're essentially allowing lenders that have Bitcoin to give the borrower synthetic exposure to Bitcoin, but they always hold the keys. There's never any rehypothecation. Nobody holds the keys except for you. But I'm scratching my head saying, why is that valuable? Why does someone want synthetic exposure to Bitcoin in exchange for paying 10% a year? That doesn't make sense to me.
Well, that's just how good of a salesman that person is. I mean, it's like, try to rehypothecate an asset you don't have a bare right to movement on it. It's just salesman tactics laid on top. But like it should be possible because if you think about in all the currencies, the reason why euros are held in Europe and that's fine and no one's questioning, well, why does the euro make yield, is because there's active economies being marked and accounted for under with the euro basis, and the same with the dollar. And so like when someone buys a good or offers a service for their cost is less and sells it for higher, boom, they've made a net profit. That's always denominated in dollars. All these Bitcoin companies and people that are, public companies, operating companies, everyone is doing their accounting in dollars and evaluating their business health in dollars. And if Bitcoin collapses and, oh no, the dollar return on our products is low or poor or whatever, then it causes these like liquidations and cascading falls. And it's because we're constantly, even as an industry, marking ourselves to dollar. Even now, like in all these conversations I hear, everyone's like, oh, well, Bitcoin's providing that 40 to 50% CAGR and it's a great performing asset. It's like, well, no, it's the asset you want to own. And then you need to get off like evaluating towards the dollar. You need to find like or produce economies that use this as the base accounting. And the lack of that ecosystem in Bitcoin is, I mean, it's a really hard challenge, and it's not really like can it or can it not. It certainly can, but it's will humans use or create economies like that or businesses like that? And it'd be interesting to me if like these treasury companies allocated some percentage of their holdings to stimulating some economies and goods and services like that, where Bitcoiners can slowly like get off, the dollar counted system that's built. Does that make any sense? Because or else, that's why these currencies can go make yield.
Yeah, it does. And I agree that getting more goods and services purchased and using Bitcoin seems to be of more of importance to me of late as the number go up. So I'm right on board with that.
Yeah, I never cared much for it, but now that I'm hearing this argument, I'm like, and maybe there is like definitely an importance on it.
I have a question. I'm curious if Bitcoin has changed your diet. I'm seeing a lot of pictures of meat and steaks and ribs, and I know that's another rabbit hole, right, with the health system. But are we all carnivores here, or how has Bitcoin changed your diet?
Natalie, as long as you don't go looking at the people taking the sunlight on their butts, you're in good shape.
Meat is murder. No, I'm just kidding. I like to eat things with parents.
Yeah, Natalie, it's funny. I love every time we get questions from you because you're reminding us of all the steps we've kind of gone through. But yeah, in general, Bitcoiners, because we've learned and been exposed to how the fiat system really works for most people who did not understand it or don't understand it, and we want transparency. In addition to the problems with inflation and trying to cover and hide inflation by, putting cheaper products in, building materials, in cars, in food, in clothing, and everything, because you can only raise prices so much before, people will protest or go elsewhere. So, when you can take chemicals and things that don't require as much time or as much money to harvest and produce, those start ending up in lots of products. Like everything you buy nowadays, for the most part, it's nothing is made as well as it used to, and that includes our food supply. And so, a lot of Bitcoiners, at least if you want to believe everything you read on X and whatnot, but including myself, have started to alter their diets because they start to pay attention to what they're eating and what's in things. And some of it extends also from COVID and other things where we were like, maybe they weren't telling us the truth. Maybe the food pyramid isn't accurate. What are the incentives of people that were telling us that we needed to have more grains or 5 servings of bread? And I think a lot of people that pay attention to that anyways, even outside of Bitcoin, they probably already knew many of these things, but many of us didn't. I didn't even taste meat until I was 25. I was raised a vegan, and it's like I've only since learned, and partially because of Bitcoin, that I was just eating processed crap. And I don't know. Maybe I would have been even sexier had I actually been eating meat back then. Be hard to
What
imagine.
did what did you eat for breakfast this morning, Terrence?
Well, I haven't eaten yet. I try to delay as much as possible, but I'll eat 3 eggs, and that'll pretty much be it.
I went carnivore about 2 years ago after I was having consistent inflammation issues where, and also it was affecting my brain. I had constant brain fog and I was not performing like I used to when I was trying to work on projects. And so as a whim, I just tried it. And the longer I did it, the better I felt. It's really expensive, I got to say. Now I actually changed again to more just kind of keto because there were some supplements and things I wanted to add back in that was really helping me. So now I supplement DHA, creatine, I take methylene blue, potassium citrate, mag citrate. I put all that in a drink and I drink that all day. But other than that, I'm primarily carnivore.
Yeah, I just love hearing and learning, how Bitcoin can just elevate your life in all ways and going down different rabbit holes. And someone uncovered, I guess, a conspiracy surrounding Jeffrey Epstein and the harvesting of girls and how it's ending up in the McRib? I don't know. I'm just hearing all sorts of things.
I think, when you find real money and you break down the definitions of what money is supposed to be, what is real money, you can do that for your other areas of life, right? Like, do you have the career you want? Are you doing what you want? Your relationship. You can just sort of ask that about everything in life. And I think food, it's like oftentimes it's an afterthought because we're so focused and on the treadmill and trying to do something that we're grabbing something quick, or we're not really paying attention. And the hungrier we get, we just grab what tastes good. And so it's very high in chemicals or things that uh, keep it preserved. And if you it's not easy, and it's think about how broken this is, that we're in a world where we have to spend extra energy and money just to have real food. Like, it's just food, but we've just deviated.
It's also much worse than that, Terrence, because now, right? I mean, it's coming out that your tax dollars literally funded the bioweapons in Ukraine. There's 120 labs that your hard-earned tax dollars went directly to funding pedophiles and funding your own death and destruction, right? Like Bitcoin is the final wake up. COVID was kind of like the test, right? It was kind of like the training wheels. Like, hey, this is kind of weird. Why should we inject poison on an untested, unproven vaccine, right? That for like a normal cough, right? And so like this is much bigger than people realize. And when you kind of like tear off, the mask of everything, you realize all of it's fake and gay. It's all communism wrapped up through NGOs and mass formation psychosis, to where people just believe and trust other humans because they're on television, right? And so this breaks every single thing that's out, and you start going down other rabbit holes. And this is why, like, this is a seriously biblical transformation we're living through that I think a lot of people aren't grasping, because I think a lot of Bitcoiners just saying, hey, we'll fix the money and then we'll just go back to voting and paying our taxes to pedophiles, when in fact, like, no, like Bitcoin is the new turning point. Like, this is when we, the people, take back our power. We kick all the parasites out of the powers of position, and we no longer have to fund our death and destruction, and that only things that are benefit to society will actually get legs and grow. And so, we're in a very pivotal part, and people need to wake up to the evil. They need to wake up to the tyranny, because no one is coming to save you. You have to literally opt out, and you have to find the answers for yourself. And so, welcome to the end of the rabbit hole. This is really where
It
it
sounds
begins.
like, G Money, you just need to vote harder. All right, let's talk to Tico.
It sounds like you voted hard, Terrence, and you found out.
Tico.
Good,
Tico
good
can talk
input.
about the food stuff too, Natalie.
Well, and Natalie, what I wanted to say, it's actually health that is the ultimate storage of wealth, right? So that's really important, because it actually comes before Bitcoin and money, because it's your choices, right? So no doubt, how we choose to raise and grow food for minerals and elements in order to feed us does make a difference as it cascades down the supply chain. And I wanted to make a point to what Terrence said, which is starvation is a huge incentive. Right. So if you're starving, you will absolutely eat just about anything. Right. But if food is abundant and it's absolutely everywhere, the question really is what is that food derived from? And how does that process end up affecting your health negatively? Look to the biome, in my opinion. I wanted to make one point. I think it was Ben who spoke. In my opinion, Ben, it's merchant. Like I see Bitcoin companies go into like merchant type models, and they're going to end up investing into goods and services companies that provide value in the form of either food or stewardship, because that economy is $5 trillion a year. It's based on physical things like commodities, and the physical world will end up creating value, return on investment, and opportunity for those who may be holding Bitcoin. And I think that's really where we're going, to be honest.
Let's go to Jay. We'll come back to you, Prom. Just haven't heard from Jay.
Hey, Terrence. Yeah, someone mentioned earlier about borrowing against their Bitcoin for liquidity, and I think that's a good idea. My, I'm kind of confused as to what is the best way to do so. Like, I think Coinbase has the lowest rates, but a lot of people seem to be down on that. And Strike, in my state anyway, the minimums are just ridiculously high, and it doesn't seem very feasible. And Ledin, I feel has really high rates, like 12% or something. So I'm just wondering what people have used, if anyone's had any experience with that. What's the preferred method to borrow against your Bitcoin?
So I think, I mean, like anything, it's very personal. But to address the higher topic, when you said borrowing off your Bitcoin is a good idea, that just depends on the person. A lot of people in the past have gotten wrecked borrowing off of their Bitcoin. Some people feel Bitcoin is just money. You should just spend your Bitcoin. Try to find people that will accept your Bitcoin or sell it for dollars when you need to. But I totally understand and respect borrowing off your Bitcoin. And in fact, I do that. Um, I do know that there's risk, and so I do it with a small percentage, and I keep the LTV, the loan to value ratio, very low. Um, so it depends on your risk factors, Jay, because there's these centralized custodial places like Coinbase where they'll give you very, very low rates. I think they're like at 4.4 or 4.3% right now. But you're technically going into Morpho on another chain, and you're having to trust those smart contracts. And maybe that's okay, but even Coinbase says, they have no liability on that because they're just servicing it for Morpho. Um, then you have on the other side, you have places like Ledin with proof of reserves, and they don't rehypothecate your Bitcoin. But of course, you're going to have higher percentages. So the places that you maybe don't like a Ledin or a Strike or a Debify or whatever, are going to have, at least right now, probably double digit percentages along with the origination point or fees, because for the most part your Bitcoin is just sitting there. And the ones that are much smaller or lower, you are taking some kind of risk. But there are great peer-to-peer places. There's places like HODL, where you're just lending and borrowing directly from someone else. And they usually use some kind of multi-sig where there's an escrow agent that has one of those keys. So if one of you guys doesn't honor the contract in time, that escrow agent can sign to get the funds back to you. Um, so I don't know. It's you really just have to research all of them. And now even Roxum, the big company, just came out with their own lending product. I think it's 7.25% across the board. Period. Doesn't matter how low or how high. Um, but I haven't looked into. I think that's actually tied with Tether. I think that's actually Tether providing them with USDT. But I could be wrong about that.
Has there been like any? I'm talking about Morpho, not like Aave or any of the other protocols, but has there been like a huge failure since Coinbase rolled out these loans on Morpho? Like, I don't know. I don't really understand why everyone's so against it. If like, it sounds like the biggest risk is just the volatility risk, which is on every platform, right?
Well, I don't know how long you've been here, but a lot of us were here during the centralized finance, what I would call scams now. And, people could take loans off of BlockFi, off of Celsius. I don't know if Voyager had them. There was a company called Vald that had some. And a lot of people got wrecked. And a lot of people thought there was nothing wrong with those as well. So if they're rehypothecating or they're lending out or doing something with your Bitcoin, and it comes time for you to pay off your loan and get back your Bitcoin, and it's not there, you might be upset. And my understanding is, with some of these, let's say you lose your Bitcoin on one of those places that you borrowed off your Bitcoin. Not only do you still owe the loan back, you've lost your Bitcoin. So I would just say tread lightly and be careful.
Yeah,
Um,
I had a family member that got wrecked on Celsius. Much better now, but another alternative that I haven't heard people talk a lot about that I did, full disclosure, do myself, was I was basically had a lot of IBIT in a brokerage, and I was able to take out a loan against that and then purchase STRC with it. Now, I don't recommend doing that now, but I did do that in the past, and that way there was no, custodial risk with that on the Bitcoin itself. Obviously, there's always counterparty risk because it's, you know, not yours. But at a 5.8 to 7%, you know, interest, that was a little bit better for me, especially with STRC yielding 11.
Yeah, I see Fred down in the audience. If he came up, he would know because Fred's built a platform himself, and he has a fund where, for risk, he separates among, I want to say, like 5 or 6 different lending companies. So he might have some more information for you, Jay.
Do they have is there in-kind redemption for Bitcoin for IBIT, or is that not a thing? Because that sounds like a better idea to borrow.
For us retail people, there is no such thing as ETF in-kind redemption, or at least yet. I am optimistic someday in the future that might happen, but right now it's mostly for the big dogs or institutions. I mean, that would be a game changer, I think, because then you truly can say that some of these ETFs are great stepping stones for people coming into Bitcoin, because then they can move into self-custody, or vice versa. People that want the advantages of going to an ETF, you know, to have some kind of portfolio loan.
Okay, thanks a lot, Terrence.
I would expect that the financial services industry will slowly evolve to create all kinds of products against Bitcoin as Bitcoin rises in ascendancy and its value and its relevance in the overall financial ecosystem. Right now, it's sub $2 trillion asset, and in the scheme of things, it's small. It's small compared to stock market, the bond market. It's small compared to real estate, gold. It's even I think lower than silver right now. So, but as it gets bigger and bigger, people are going to look to create products and services around that, and then you got to read the fine print and do your own homework. But you know, the BlackRock ETF, I think, is their most profitable ETF that they've launched, and you know that's not you know they're gonna the bankers like one thing, they like money, and so they're gonna look to create products and services. The one thing that I would tell people who are considering a loan structure is do not rely on the LTVs that the lenders will lay out, because I think you got to keep it very low. I would target an LTV at no more than 25%, and then you can sleep with knowing it will never get liquidated. I mean, it would have to be a catastrophic drop in order to get liquidated at a 25% LTV, and just maintain that. And so, if you're going to take it to the edge, you expect to get liquidated on a drawdown, and you'll part with your Bitcoin, which is at some level, you know, as much as the bankers and all those love money, there's also going to be predatory actors out there who are going to want to use the loan constructs to get access to your Bitcoin. Now that's probably not a big deal today. In the future, it'll be a bigger deal.
Prometheus.
Yeah, so many interesting topics covered. First of all, Terrence, you know, you don't need to eat meat to be sexy, although it can help, I suppose, at times. And you are definitely a good-looking man. Outside of that, I've shared in the comment space, you know, an unpopular opinion, which is that if you're not using your if you're not wisely leveraging your Bitcoin, like, you're not going to get regular returns. Okay, like Bitcoin, at least in the short term, I believe. And why do I say that? Well, you know, like what we've been discussing so far, Bitcoin is a form of money, right? It's not something and money needs movement. It can't just, I don't believe, if you want to make more money, you have to move the money that you already have in a wise way. All right. That's obviously a different risk profile for every person. I'll just speak for myself here. We're leveraging our Bitcoin and some of our systems to build a vertical farm thesis here in Bangladesh at the moment. And I just like what we were talking about, right? Like food, high quality food matters. And I absolutely want to bring, you know, high quality food to the States and the UK and other marketplaces. I eat bananas here. Guys, they taste so different. It's like they've got minerals in it. It's actually delicious. Bananas, mangoes, all kinds of things. And then I compare that to what I've eaten in European countries or sometimes in the States. Not everything, but some things. It's just so bland. Have you guys noticed that the food just tastes bland? It doesn't have that same kind of kick as it used to. So I think, investment has many different shades and forms. And to each their own. I'm just sharing what I'm doing. And we're using ARC Lending. I don't know if you're familiar with them, Terrence. But they don't rehypothecate your Bitcoin. I know the CEOs and founders well, and they seem like trustworthy guys. They're properly integrated with the market with the relevant FCA and SEC approvals and whatnot. And so I think as this marketplace matures, these sorts of integrated solutions is what we should look to, especially if you're serious about building the future, right? Instead of just sitting on your Bitcoin and just waiting for the price to rise, that's just, you can, but it's just so boring. I don't know. That's just me. But yeah, those are my thoughts for the moment.
Yeah, good thoughts. And I do think the future of Bitcoin as more banks come online and regulation starts to become a little bit more clear, I think lending products will be very ubiquitous and will feel a lot safer to a lot of people. There obviously is always going to be a level of trust that everything outside of Bitcoin's actual system live in meat space, and I think that will benefit a lot of people because Bitcoin should appreciate much faster than whatever you're paying to borrow off your Bitcoin. Tico.
I was talking to a bank, and I was actually talking about a structure of how they would use Bitcoin in their classic traditional finance. So if you think of like a real estate transaction, let's use a simple home where you're putting down 20%. Now, under the FHA and the all those things, you have conforming rules. So these would be more a non-conforming loan structure. But you take that same 20% and you split it between 10% Bitcoin and 10% cash down. And it's a hybridized collateral structure where the Bitcoin is held in escrow, large pool. It's part of a collateral system. And for the bank, what it does is the lender, and especially in a non-conforming situation, it reduces the friction of foreclosure. So if there is a foreclosure event because of non-payment or whatever the reason is, a bank is looking anywhere from 6 to 18 months, depending on the jurisdiction, to foreclose, and it's a tremendous amount of cost and friction. And what a 10% collateral on Bitcoin does is it puts in a frictionless liquidation component to the collateral. And so, yeah, if you have the Bitcoin and the bank is willing to do that, now what it does is it de-risks the loan. So theoretically, they could offer you a lower rate as a result of that de-risking. Now, these products, the bank was interested in the conversation, but they were not willing to act at this time. Now, that makes sense because they're conservative. Bankers are conservative. They want to be educated on some of these opportunities. But what I just described to you, I believe, will emerge in the coming 1 to 2 to 3 years as Bitcoin becomes. We use the term it's pristine collateral. Well, what does that mean? How do I use it as pristine collateral to improve what I'm doing in my life? Now, again, at all times, as soon as you introduce counterparty risk from a sovereign asset, you're doing something that you need to be very smart about. And but there is going to be some utility that can be derived for people who want to take and use their Bitcoin in ways that are, say, non-conventional from today's protocol.
Yeah, thanks, Thomas. I think we had Tico and then Arbin.
I was just going to say, I saw Chad post something recently that basically described, hey, as a farmer, one day to see if it's growing. So I think trusting the process and understanding the risks, whether it's Bitcoin, obviously, or farming is important. And to Thomas's point, farmers were the first ones to utilize insurance and pooling systems in order to achieve what Thomas just described, because there is no guarantee with farming, because at the end of the day, death is a possibility.
Arbin.
Yeah, I just wanted to add it to what Thomas was saying. I could not agree more. There's a lot of missing aspects in this. So a little bit of background. I like to call that Bitcoin fusion, where it's a dual collateral structure under a traditional loan sense. I think all of Bitcoin-backed lending right now has been built solely based by the Bitcoin being the collateral in the loan, where the traditional system actually has long duration credit risk priced in from historical loss curves and understanding of credit scores and verified income and whatnot. And the banks using it in a dual collateral fashion. If you look into and research that, there's very few individuals and entities in the world who are doing that. And I'm trying to jump in the race by bringing Bitcoin and traditional finance together. It's actually why I started my startup that lets people finance a Bitcoin purchase, just like you finance a car or a home. And so I'm in these conversations with not only the custodians, but also the lawyers, and also looking at the loan contracts. The reason it's a few years out is there's still a lot of confusion with some of even the best lawyers in the world on how to structure something like that and how to create sort of like a payment runway for banks and lenders to, partially sell Bitcoin when people are bad borrowers. And but you're totally right. The rates will go lower for individuals who pledge Bitcoin alongside their traditional loans. And another missing component that's going to develop over the next few, year or two here that's going to be required for this is a sort of DMV or a sort of municipal level style of securitization on top of Bitcoin. So as of today, if you want to work with BitGo or one of these other lenders in a tri-party sort of agreement, which is required for this type of structure you're talking about, I mean, these loans and Bitcoin sizes have to be $250,000 to $1 million and up. And so consumers or individuals who want to use Bitcoin to get lower rates on these loans, it's just, there is no system right now and no custodian right now that's geared technology wise and legally to manage that relationship. Just like the DMV manages it for our cars and title release, and the entity and the municipals do it for home deeds. So it's coming, but there are definitely some barriers to break down first.
Arbin, think of the hybridized collateral structure for a classic loan. Let's say I start off with a 50-50 collateral structure and then hybridization. And so long as, now let's assume that the Bitcoin component of that collateralization grows well in excess of the APR of the loan. And we have it, say we have a nice bull run. So now all of a sudden my loan and my structure is overcapitalized. Well, there's a lot of things that can happen when that goes on. I can have the bank cash me out on a return of capital protocol, and I can use that to fund the coupon payments for the underlying loan. So imagine I do a 50-50, Bitcoin goes from $65,000, $70,000 to $200 or $300, and all of a sudden that Bitcoin that I have posted as collateral, because it's over collateralizing the loan, my cash out covers my coupon and my mortgage payments are essentially go to zero. And so again, you can get really creative with these things. For the most part, mortgages in the United States fall largely into a conforming loan structure coming off of the great financial crisis. There are banks out there, especially DeFi situations, where they're creating very creative solutions. So I just think it's going to go more mainstream in the between now and 2030. It's just a question of how fast it gets adopted. But you can get really creative when you have Bitcoin in the structure on the collateral side. And again, again, I just caveat everything. You got to do your homework on this stuff and make sure you're not you're not making a bad decision with a sovereign asset.
Yeah, last point. I don't want to take over the space specifically on Bitcoin Fusion because I could talk about it for hours. But the last thing I want to mention on that is you can certainly get really creative, but if you want to access the lower rates and also create like the standardized model where individuals can just unilaterally pull up their Bitcoin and benefit from it, the structures have to be somewhat uniform. And so like there has to be a consensus among the lenders, or at least a structure that just progressively improves the loan structure. And the issue with doing like cash outs, I mean, it can be sort of like a refinancing. But when a lender writes you a loan with Bitcoin alongside a traditional asset for a loan, they're taking a long duration risk on both sides. So if the Bitcoin falls, all these structures don't have liquidation mechanisms that are getting rid of liquidation mechanisms because there's more tied up than just the Bitcoin. But if the counter happens and the Bitcoin rips up, the borrower would still need to pay up cash to get out of it. Like the lender's not going to just open a clause to let someone span out. They're going to wait for a borrower to just close their loan on a fiat basis and move on. But yeah, anyways, it's very, very interesting. I'm 100% on board with you. It's coming.
That one product I was mentioning before was kind of interesting because they're using discrete log contracts to where the lender basically posts their Bitcoin to an address. The borrower gets to claim that Bitcoin is theirs, I guess. And then based on the price of the Bitcoin in a year, based on the length of that contract, that's the rate that they get paid out. So the risk for the lender is that if the Bitcoin price rises, they'll get paid out less dollar value based on the contract, but there's no actual custodial risk to them. So their yield is basically just kind of variable on the price of Bitcoin.
I mean, it's really not that different than real estate. The majority of people that own their own home, they shouldn't be borrowing off of their home. They don't necessarily need a HELOC. But when rates are really great and you have a lot of equity and you're confident because you can pay the monthly fees or the debt, then it's like, yeah, taking a HELOC could be smart. But we've seen, and especially during the great financial crisis of 2008, 2009, people that got over leveraged with those HELOCs. And so the same thing is with Bitcoin. You just have to be responsible and think about what you're doing. Prometheus, and then after you, Prometheus, I think I'm going to go around the horn and get people's final thoughts. I do need to jump pretty sharply today, so I just don't want to rush people. If you're okay with that, Chad and Anon.
Yeah, that's fine, Terrence. Thank you so much. Everyone listening, please retweet this space. I've also put a link to Terrence's book, Proof of Money. Highly recommend you guys check that out. Terrence, you made a really good point that this Bitcoin isn't too different from real estate because obviously you hold value over time. But more importantly, and this is a point that's in your book, is that, unlike real estate, there's no upkeep. Unlike real estate, you don't need to worry about all these tax dimensions and where did you buy the real estate, like all these headaches that normally come with real estate. You don't have that with Bitcoin. So, if you want to think less and keep things simple, of course, Bitcoin is a great strategy. Anyway, no, I just I'm very grateful that we can continue to have these conversations. And for everyone in the audience, look, to get a lot of this information that you get on these sorts of spaces, you would need to have an order book from Financial Times or or the Wall Street Journal. Instead, you're learning from the professionals here and people who are making decisions with this capital every day. So from that perspective, Terrence and everyone here who host these spaces, over the past couple of years, I've just learned so much, and I just want to give you a big thank you and give you some flowers that you deserve. I do need to bounce off, so yeah, happy to make some give everyone their final thoughts, and thanks for giving me the mic.
All right, thanks, Prometheus. Yeah, I don't really like flowers, but I appreciate the sentiment. Anon, you want to take us around the horn? No? Okay. How about you, Chad?
Sure. Thomas, you want to lead us off?
Yeah, I mean, it's an exciting time. Let's hope this war, this time it's real, and we start to see some peace and some stability in the global economy. And I just look forward to an outstanding second half of this year, and I hope it lands well for everybody.
Tico.
Yeah, I want to second what Prometheus said. Is the alpha, the value and the performance being delivered on these spaces is unmatched, and that should be the lesson, right? That's the world we're getting into. We're going to do better, we're going to reduce the risk, and we're going to create more value. So 100% thank you so much, Chad, and Terrence, and then root for your favorite World Cup soccer team, of course.
Pleb Bitcoin.
Hey, just want to say thank you very much for hosting the spaces. I'm a long-time follower of you guys, and I really appreciate all of the knowledge and wisdom that you share over here. So thank you very much.
Disco Natalie.
Yeah, hey Chad. I'm just so very thankful and blessed, I feel, to have found all of you. It's just such a great group of people here, and I just enjoy these conversations, and I feel like it's really helping to elevate my life. So yeah, just thank you for including me in these conversations.
Awesome. I think that wraps us out, Terrence. I'm going to say goodbye from Blockheight 953812.
How about you, Anon? I can't hear you if you're talking.
Yeah, there's a little delay for me whenever I click the button, but good space. I'm really hopeful as we approach August and there's more of a gun on the table, we can have mature conversations around 110, and it just doesn't devolve into name calling and ad hominem like it usually does. But good space, everyone.
Yeah, thanks, Anon. And I agree. It's like I'm just here to educate and educate myself and to talk about the day's topics and as they relate to Bitcoin. Bitcoin really is quite simple if you talk about exactly what Bitcoin is. But because of that, as it interacts and intersects with the complexity of our world, there's lots of things to think about. And it's amazing with how simple Bitcoin is as a network that we continue to learn from what's going on, whether it's the macroeconomics or the geopolitics. And I'm just aware because I was this guy for 2-3 years as an anon. When you come into these spaces, many people are coming for the first time, and so I want to try to stick to themes and concepts and heuristics, and not talk about people, whether I like those people or not, whether I agree with them or not. This is not the place for that, and so people can run and hold those spaces if they want that kind of drama. And so I just kind of think of this as like an open coffee shop, and we're all coming here to talk about, what we're affected by, what we're thinking of. And so I appreciated when Jay came up here and was like, hey, should we do Bitcoin loans? And it's like, okay, you know what? That is on people's minds, and it's going to continue to be on people's minds as we enter a bull market. So anyways, I appreciate everybody. Thank you so much. And see you guys tomorrow.